What is going on YouTube? It's Sank, we are back with another one. Now in this drop, coming at you guys with a couple of plays and a bring to attention. Before I kick things off, I'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, that kicks off a fresh new week in these markets. Now as I was saying to you over the weekend, this is a massive week for the stock market because we're getting that inflation information tomorrow. We are kicking off earnings season starting with the big banks, and we're going to hear from Powell to shed some light over the economic situation and inflation. And as you know, that's an overriding theme in these markets right now. So understandably, given all of that, some of our players are moving more sheepish out there in the markets today, couldn't quite make up their mind in anticipation of all the news and the results that we're going to be getting from these big events this week. So I'm going to need you guys to be on watch out for our quality plays that you find in the buy zone this week. You already know all the noise that we're encountering in the markets doesn't change the fundamentals of these plays, doesn't change their end destination, but you know these plays in the short term, they ride the tide. So it's an opportunity for you to grab quality plays at discount. Now in this drop, I'm going to guide you, put you guys on the right lanes so you can hit success with me this week in these markets. Now before I get onto the plays I want to talk to you guys about, I've got to pay some homage to one of our channel plays. So we've got ticker symbol DIS, that's Walt Disney. Now this one came alive today, up over 4%, closing above $180, and that's something we haven't seen for a while in this one. Now, this is a play I've been speaking to you guys about frequently over the last couple of weeks, and as a matter of fact I spoke to you about this play yesterday also, so you guys should already have your positions built out in and around the 170s on this play. Now regardless if you're in this one or not, key takeaway from today's price movement is that Wall Street often, I should say very often, overlooks quality plays in these markets, caught up in other matters, distracted by other things, causing these plays to either consolidate or drop temporarily. So check this out, on the last 3 months we know this one has been dancing around the 170s before we saw that movement up today. So as I say, when you catch these quality plays in weakness, it's easy money on their rebound. Now this is a play I've been speaking to you guys about, putting it on your radar over the last couple of weeks, and given the success of their Black Widow, now it's been put on the map for the rest of the market to play catch up with us on this one. Now this should reinvigorate their stock price as we continue through the second half of the year, and that being said, this one's still got big potential from where they're currently at, because as all those movie studios, those theme parks, the cruise ships open up, it's going to fill that gap that they had in their financials from 2020. So big upside, and this one will be a multi-year winning play for us given the streaming side of the business. So that's something not to forget as they continue to expand and gain traction internationally. Okay, so I just wanted to shed some light on this one, and I also want to say to you guys, a lot of that activity we've seen today is going to be as a result of slower retail investors. Those who are slow to move didn't catch this one in the 170s. So it could bring the volatility in this one over the next couple of days and weeks. So buy zone remains under $180 on this play. But the real heavyweight buying power is going to come after their Q3, Q4 results this year when they post up solid numbers. So if you're in this one, I just want to say good job. So we're going to kick things off here. That's ticker symbol SONO. That's SONOs. We're standing $35 on this one. Now, while it's still fresh in all of your minds, we're going to take a leaf out of the Disney playbook that I was just speaking about. So check this out. On the 1 month chart, we've seen this one move down less than 1%, so there's no real price action. Now, on the 3 month chart, we've seen this one drop from the low 40s down to the mid 30s, and they're just consolidating right now. That is trading sideways in the channel at the high around $37, the low around $33. This should remind you of what you just saw with Disney before they made their breakout. So I'm letting you guys know about this one because this is a play that will break out. So I'm putting them on your radar so you guys can get good entry on the play where they're currently at. Now I'm going to put you guys on a bit of game because Sonos is the type of play that releases little to no business updates in between earnings, and I like these types of plays. It's similar to a love sack. That's ticker symbol LOVE, because what tends to happen is after earnings the market tends to forget about the play. That's why you see this one come down, bit of a sell-off, but it's an opportunity for us to get into the play ahead of their next earnings. And Sonos, they made it very easy for us because they got several tailwinds off the back of their last earnings, and they've increased guidance for their numbers for the rest of the year. So the business is firing all cylinders. As I say, that stock price isn't reflecting that, and when they post up great earnings, you'll see that reconfiguration in that stock price and they will start to climb. I'm expecting this one still to close out the year at $45 which will mark a new 52-week high for the play. So I'm gonna check in with you guys on this one. That's ticker symbol HITI. That's HITI. We're standing $7.15 on this play. Now if we check out that stock price, this one's trending very close to a 3-month low. As I told you guys in one of my previous drops, I said do not be surprised if you see this play come down to a 3-month low. This is just the natural channel that it's going to move in. Okay, we know they post up great earnings. This is a fundamentally sound play. What you guys need to do is ensure you've got your position in this one ready for the bounce. Now let me tell you guys the strategy with this one. I've got my short-term position locked and ready in this play, and I've also got my long-term position, so I'm looking to sell the rip. This one is going to have a bounce some point in time up to, could be the $8.50, could be the $9 region, could be the $9.50 mark. And before there is that pullback, before there is that sell-off, I'm gonna net great results, take my short-term position out of the play, rotate it into another play, and leave my long-term position to run in this one, because we have medium-term potential in this one to double, we have longer-term potential to triple off the back of the momentum that this play has. They are solidifying their position in the industry, and there's a lot more to come from this one. You guys, if ever the volatility starts to take you off course, just have a look at their last earnings. This one increased that revenue almost 100% year on year. This play is firing on all cylinders. You want to make sure you're in on this play as well. The next one I've got for that's ticker symbol LOVE. That's Lovesac, sitting in the buy zone at $69. You guys know I say catch this one under 70, because what we are doing is we're buying a healthy pullback in this play. And remind you, this was once a $90 plus play. There are some profit takers, that's fine. We saw this one come down to that $70 mark. So we are getting in on the action at that cheaper price point before they make their return to those previous 52-week highs. This was a winning play in the first half of 2021, and we hit major success in this one. Now all the tailwinds that were there still exist to make this a winning play in the second half of 2021 as well, because the housing market is still hot, playing into their favor. Consumers are still sitting on cash that they are spending as well, also playing into their favor. And we know they've been opening up their showrooms, which help bring a new wave of customers to the business. Okay, so if you're not in on this one, make sure you guys grab this one in and around the high 60s on this play, because this will be one of your winning plays as we move through the year. Alright guys, so those are the plays I've got for this one and the moves we're going to be making with them. Now before I wrap things up, I want to put you guys on an extra little bit of game. You all should have what I call a pullback watch list. So these are some of your high flying plays, those plays that are defying gravity. You want to all put them in a pullback watch list. Several advantages to this. One is that it will prevent you guys from FOMOing into these plays, buying them at these higher levels, because you know they're on that pullback watch list and they will come down. There will be some profit takers at some point in time and bring this one back down to normality. It will also ensure that you guys are prepared, not surprised when they come down, and you can get ready to make great entry on these plays. And also, if you're into options, it's an opportunity for you guys to put down some puts and make some money on the way down. Now, I want you guys to put MP Materials, ticker symbol MP, on your pullback watch list. This one's currently standing $38. I'm expecting this one over the next couple of weeks to come down to that $33, $32 mark where good entry can be made. Okay, so as I say, just start accumulating your pullback watch list. It's going to help you guys make some great returns and help you guys make some wise investing decisions. So if you rock with the channel, you know what time is. What would you consider to be a healthy institutional ownership? Now, some basic checks that you guys should be doing before you jump into any play, and one of them is checking that institutional ownership. Check the retail ownership. It takes a matter of seconds to do so, but it'll give you great insights into the place. Let me tell you what I mean. First up, institutions, they're going to be your money managers. They're going to be your investment firms, your pension funds, your mutual funds. They are the heavyweights in the game. They've got the serious buying power, and they account for 75% of the stock market. So you want them in your plays to drive that momentum. Also, they typically have a longer investment horizon than your retail investors. So they're not going to be in these plays typically for 3 weeks or 4 weeks. They're going to be in these plays for months or years. Okay, so that is going to reduce the volatility. Also, they're going to be typically reinvesting into these plays off the back of good catalysts. So they've invested into Sonos, for example, and Sonos is showing momentum, and they release that earnings note, boom, you're going to get institutional investors jumping back into the play, increasing their stake to get in on the further upside. Now, when it comes to what I look for in terms of how much institution I want to be in the play, I look for 50%. That's my target. If I have a play around the 50% mark, it could be 45, it could be 40, but that's the mark I look for. Alright guys, that wraps up for this one. If you got any questions for me, leave them down below and I get back to you. I want to say I appreciate you guys. On your way out, light up that comment section for me, and if you're new, join the movement, and I catch you in the next one.